So let's give this another try. Um, well, as you know, the world of business is constantly changing, and organizations need to be adept at keeping pace. But they must also ensure that their clients are who they claim to be. The real value today is not in money, but in identities. My name is Frans Bolk, and I do welcome you to our webinar about identity fraud challenges in fintech. We've put together an amazing lineup of speakers who will share their insights, experiences, and knowledge, all within the hour. Stay tuned for some fantastic presentations on innovation in financing and identities, as well as onboarding adventures from CEO Laurent de Bernede, followed by a talk given by Richard Ney from Lerex e-wallet solution. Don't forget to submit your questions via the chat box if you have any burning queries throughout. Lastly, we also want to remind everyone that it will be recorded to make sure you don't miss out on anything. Identity fraud is a real problem that is costing the world billions today. But so let's figure out how to slay this digital dragon together and keep our companies safe. When we onboard somebody new, it might seem like an intimidating task, but with a bit of know-how, you can make sure your customers are who they claim to be. The backbone of customer due diligence process revolves around three questions. Who is this person I'm onboarding? Do I want to do business with this person? And thirdly, should we continue doing business? To answer these questions, you need proof that their identity documents are valid and genuine. Don't sweat. Armed with knowledge on verification techniques, you will have no trouble keeping scammers at bay. I'm going to start with a question. Would it be helpful if you would know for sure a passport is authentic, meaning from a state or organization, that the passport is not compromised and valid, and that the person belonging to that passport is genuinely present? Of course, it's rhetorical. Yes, of course it matters. What we then have the full legal identity of that person. That's the most important step in an onboarding new customers and preventing identity fraud. Didn't know that your passport had a secret? Well, it's true. Inside every one of them sits an NFC chip, and that's no ordinary tag. It holds the electronic sign seal of authority from whichever state organization issued it. That electronic signature is even legally protected and is the only secure attribute in or on the passport that can be remotely verified with full 100% confidence. Any document featuring this seal can be verified with mathematical accuracy, making authenticity easy without compromising the integrity or validity. That is why that simple passport can give you access to 194 countries and be recognized around the world as your legal identity. In Europe specifically, there are even a directive from the European Commission protecting such digital signatures. So no more second guessing when it comes to safety or security concerns. Of course, this trust process is something to consider. That is why a simple passport, the electronic signature, guys, this electronic signature is the foundation for what is called the public key directory in use by 194 countries and is fully standardized. PKD is a trust process where signatures are exchanged for verification purposes. Countries exchange these signatures electronically or by diplomatic pouch. So you can imagine that having a trust process to collect these signatures and verify them in a trust process is mandatory. So let's have a look at the differences between PKD and AI. At the moment, most commercial available identity wallets with identity verification, or even existing processes in fintech for that matter, use AI to verify the authenticity of an identity document. The principle of AI is that it compares the offered passport with known passports and then determines the likeness. So some even make other cross comparisons, but it will never be 100%. Even when the AI says it's 100%, it only declares that the document offered resembles a real document. You still don't know if the document is authentic, let alone the integrity. This is the difference between PKD and AI. PKD offers you assurance with mathematical proof. If you're worried about being scammed with a fake passport, don't worry. The PKD signature and protection stored in the chip of your passport can never be compromised without raising alarms, no matter how realistic a forger's attempt might look. If their signature doesn't match up what is securely kept on file, it won't pass muster. That means no worries about identity document paper fraud when onboarding new clients from their home. PKD got you covered. So now, the next step, of course, in the process is to verify if you want the person onboarding as a client. So you use all types of reference data for KYC or AML or terrorist financing and watch lists like the Belarus or Russian list. Even use your internal list to accept the client. When everything is negative, so okay, you accept the person as your client. Plain and simple, within seconds. So now you have successfully boarded the client. So now you need to verify the transaction of that client. After all, people change over time. What if that nice customer today suddenly appears on a watch list tomorrow? Banks need reliable data. They can trust and verify identities quickly before anything else happens. Now, that's smart safety. At Mob.id, we make identities and the processing and onboarding a breeze. No more worries about fraud or costly mistakes. Our identity wallet, fully protected through PKD, is your ticket to effortless onboarding, new clients, and success in complex environments. Don't worry if you're not tech savvy. Simply visit us online and let us know and let us show what makes it so special. Verifying the authenticity of an identity document is essential, but it's no easy feat. While AI can't give a yes or no, it gives you an estimate. So it doesn't guarantee that ID document in question is actually authentic. When compliance matters, you need full confidence and peace of mind. When determining if an identity document passes muster, life is much simpler with unshakable assurance. Well, thanks for your attention. And that finishes up my presentation. Are there any questions in the audience? Well, here's an interesting one. It's about the how we give authenticity to the signatures of the respective countries, how to do that. Yeah, that's an interesting question. Of course, I don't want to spill the beans about how we do it, but imagine that we use several trusted sources to get the signatures and make sure that they are correct. It's a trust process. But we also get them from other sources, and we do cross comparisons. So when they pass that, then we accept them in our secure area for use in the service. Hope that answered your question. Okay, thanks. I now introduce you to Laurent de Bernede, CEO of Azuli and CEO of a bank. He has some adventures to share about his journey with onboarding and customer due diligence. Hey, Laurent, the audience is yours.
Thank you very much. Hi, my name is Laurent de Bernede. Today, I want to share with you my experience. My line of work is I have two businesses that I run. One of them is a consulting firm called Azuli, which provides consulting services for embedded finance to Fintech, insurance companies, banks, software providers, and SaaS platforms. And the other business that I run is a business called Bebunken, which is the one that I want to talk about today, because I want to share an experience that we went through after the launch of our product. So Bebunk is an environmental, social, and governance impactful neobank for French overseas territories. Um, we provide a bank account, a debit card, a Visa card, so that people can spend their money. And the reason why we're an impactful company is because we provide. Sorry, my slide is not moving forward quickly enough. Let me see. Here we go. Yes, we're an impactful ESG company with a purpose. The purpose is to promote banking inclusion in a territory that suffers from banking exclusion. Traditional banks in these overseas territories tend to serve only certain segments, profitable segments of the population, and unfortunately, not everyone is within these segments. So there's an issue with banking inclusion in these territories that we decided to solve with my partners who are located over there in New Caledonia. So we service New Caledonia, Wallis, and Futuna, which are two islands in the Pacific Islands, and French Polynesia as well. It's a territory that covers a significant amount of land and sea territory, with about, I would say, 600,000 people populating these territories. So, as I said, we provide them with anyone there, actually over 18 years old, with a bank account, debit card. We have a traditional business model, which is a monthly prepaid service to operate the accounts and the cards. So we have a classic and a premier card, and we launched the product in July 2022, so a little over 6 months ago. We had tremendous success because of the positioning of our product, which is a local digital banking service serving these populations. And there was a really strong expectation for our product on Facebook. We had 20,000 followers pre-registered to access our service at launch. When we launched, we had an immediate surge of account openings, mostly from these overseas territories, but also from metropolitan France. Within these new customers that came to us, a lot of fraudsters went through our onboarding and KYC process. This happens to any new banking service that is being launched around the world. As soon as you launch a new payment service, you get a massive attack from fraudsters who need to launder money that they acquired fraudulently. This happened to us, unfortunately, and it took us a while to, I would say, to filter them out and identify them. So we ended up after 6 months with about 700 frozen accounts with our partner. The way we operate is we're an agent, a payment agent for a subsidiary of a large French bank. So they are in charge of KYC, and their KYC and onboarding partner provides us with this service. So it took us a while for them, as well as for us, to tighten the bolts and to sort of shut the door to our fraudsters who were attacking us. We froze 400,000 euros, and then we had to deal with these fraudsters. And dealing with them is a big issue. it took about our entire customer care service, which was composed of 5 people, was entirely focused on trying to deal with these people who had frozen accounts and money, and who were trying desperately to get their money back. Of course, there was no question that that a lot of them were fraudsters. We had to do some verifications and identify them, and then return the money and close the accounts, which is a lengthy process. So this actually caused us to turn away from our regular clients, with our entire client servicing team sort of dealing with these hundreds of people harassing our client servicing department by phone, by chat, by email, um, and on social networks as well. We were being slammed by libel and by people um, leaving all types of negative comments on um, on these platforms. We had to reply to these. We also got some inquiries from the regulators regarding these negative reviews. So all in all, it took us a few months to go through this and to really sort it out. So now we've returned most of this money, and we've closed all of these accounts, and we've also shut the door to all these people by tightening the bolts. So the big lesson, the key takeaways from all this is are really that these issues, being attacked by a massive wave of fraudsters, can really kill your business early on by providing really nasty reviews and a bad reputation to the service you're providing, especially in a small territory like the ones we cater to. Um, the word of mouth can do wonders, because we actually acquired all our good customers with word of mouth, with a very low acquisition cost for new customers. But we ended up having to fight off these negative comments from fraudulent users. And that's a big effort. So the key takeaways is you really need to be careful with what KYC tools and procedures and process you put in place in order to filter out fraudulent use of your services when you open a payment service initially. And that, of course, relies on two things. One of them is your technology. If you're a digital interface, mobile based. So your technology for identifying liveness, for identifying falsified documents, um, and also the databases that you use to check on real identity and real documents. So these three elements are key. And if one of them is faulty or subpar, subpar in terms of performance, that opens the door to a massive attack. Um, so really, my big advice, the key takeaway from all this is, when you make a selection of your banking partner, you really need to also double check and benchmark um, who they use in terms of a KYC partner, and what technology they use, and really the performance that they offer to you for this. So really, that should be one of the key criterias when selecting your banking partner, your payment partner. So you should really go through this. It's not only the performance of payment processing that you need to go through, and card issuing, and card authorization for transaction. It's also, um, their ability to filter out fraudulent use of your services. So you really need to benchmark the provider that they work with and that they propose to you. And if it's not satisfying, if it doesn't satisfy your needs, your requirements, then you need to ask them to allow you to pick another vendor and another partner. A third element, third lesson learned is you need to be prepared to deal with fraudsters, no matter how tight your security, your KYC, and your onboarding customer journey is, because they will get through, and you'll have to deal with them. So you need to train your customer service team to communicate with these people. There are things you cannot say, there are things you should not say, and there are things you must tell them in order to respond either on social networks publicly or privately when you deal with them. So, in training of your team and communication processes, a big communication plan should be prepared ahead of time before you launch your service. That's really a key lesson. Um, and then you also need to be careful with the terms of your contract with your EMI and your payment service provider, because you'll be paying for, so these fraudsters will open accounts, order cards. They, for the most part, will start paying for the service for the first few months before they start using your services for fraudulent use. And then when they do, as soon as they start, they will either stop paying, and you'll have to freeze the account and close it, which is costly because you paid for the KYC, you paid for the card, you paid for the account opening, and you paid for the transactions that they put through your accounts. So you really need to negotiate with your EMI and banking partner a different price for fraudsters, and for when they freeze their accounts, and when they close them, it shouldn't be the same price as for your regular customers. So I hope these lessons will help you if you have in mind to launch such a service, a payment service. And I hope that these lessons are, helpful to you guys. Um, as a conclusion, I'll just invite you to contact me either if you have any inquiries for BBank, for this neobank, um, for overseas territories. We will try to expand to other overseas territories, French overseas territories around the world, and then also expand the product offering to insurance products, savings products, further down the line, some credit as well. Um, so this is an exciting adventure, and I look forward to keeping that going. At the same time, I run Azuli, which is my consulting business. So if you need any consulting, any help, feel free to ping me on social networks on LinkedIn, or use my email address displayed on the screen. And then I will try to answer your questions and your queries as best as possible, and provide you with expert advice on embedding payment services or launching um, fine credit or payment offerings. Thank you very much. I hope this was helpful, and I'm open to answering all your questions. So, do we have any questions? I see a first question here. How do you benchmark KYC process? So it's not easy. It's not easy because, of course, you don't have any fraudulent document handy. Um, um, Benchmarking a performance of liveness detection is a challenge. Sometimes these algorithms were defined and were based on a certain type of physical appearance, and then when you deal with different races, skin colors, different um, different faces, basically, you may end up with lower performance than what you expected. And then you end up with KYCs that are rejected and that need to go through a manual process. If that happens too much, then your onboarding takes too long, and instead of onboarding and opening accounts within a few minutes, you end up opening accounts within days. And if you go through a manual process over time, then there's a long waiting time for your customers to get access to their account, and you lose a lot of them. So it's not easy. Um, uh, One thing you need to do is ask your payment service provider and ask all the providers for KYC technology um, to provide you with anonymous profiles of identity documents and identity data, so that you can try to benchmark with a set of data and documents. But again, it's not easy. Um, I'm happy to help if you have this type of issue, and take that discussion offline with you if you want to carry on. Are there any other questions? What types of fraud are most common in your business? So the most common fraud, I would say, is illegal use of the payment accounts. So we'll see an incoming wire transfer of a large amount, maybe 2,000, 5,000, 10,000 euros coming into the account, and immediately the same day being split up in 10 or 20 small wire transfers being wired to other accounts. So the reason why fraudsters do this is as soon as they steal money from someone with a fraudulent abuse or use of whatever their scheme is, it could be getting you to wire money for a product that will never be delivered, or they'll talk you into sending money to you, money to them before they send you a large amount back as a loan. It could be any type of fraudulent of fraud, and then the money comes into the account and is being split up in many accounts and shot away the same day, so that it doesn't get frozen in just one shot, so that their chances of recovering a little bit of this money before banks freeze it is better. So you'll see that going on. Anyway, I can't say too much about that because it'll give ideas to fraudsters. But anyway, it's a trick question. I don't want to give too much information about this, but this is one case, one use case where you see money coming in and coming out immediately. It should trigger an alert. And the way we do this is we monitor all the transactions every day, and we report to the REMI on a daily basis suspected fraud, use of the accounts, and then they do the verification and the checks with their professional teams. So the criteria, as I see another question from the audience. What are the criteria for selecting a KYC identity proofing technology? So there is, I'll let Frans possibly address this question. On my side, I think that the liveness should be checked and benchmarked. I see also, you should check on the ability of the technology to identify falsified identity documents. Um, and this is a key thing. A lot of times the fraudsters will steal a wallet with credit cards, with IDs. They'll replace the picture and they'll start using that identity to open accounts. So these need to be detected right away. A lot of times you'll see the same face on different documents because they'll open accounts with different stolen IDs over and over again. So the technology should be able should be able to identify these. Anyway, I'll leave the floor to perhaps the other speakers to answer these questions and address more questions. Thank you
Yeah.
very much. I hope that this was helpful.
Thanks, Laurent. Maybe Richard, for you answering this question as well.
Yeah, sure. So thanks Laurent for your presentation. I think everything you say, I kind of agree with. I think it's a very good point. On this last question, I think there also need to be some element of the right level of acceptance and decline. I think what, like Laurent said very rightly, you don't want to onboard too many fraudsters, but you will onboard some. So where is the threshold? If you start to be too aggressive, then you fall into everyone going into a manual process, which isn't good for anyone either. So I think working with your KYC provider to base on your population to find the right threshold, which is not going to onboard too many fraudsters, but likewise is going to onboard the right type of people, I think is fairly important. And I'll touch upon that a little bit in my presentation, but from the work we are doing, there's loads of work going into what's the right level of threshold, and based on the population, it's not always the same. But obviously, your other point mentioned are important as well.
Yeah. Well, for me, to answer that is, I already talked about the how to verify passports and everything with the PKD technology. That is a technology that cannot be fooled. It is correct or it isn't correct. So the only thing I want to add to it, if you talk about identity wallets, as Laurent did, the question also is, how is that identity wallet protected? Is it fully verifiable? Can I see if, for example, the picture has been changed? Is that something is changed in the identity wallet? Can I verify it independently from the standard biometry verification of the phone, for example? Can I do a face recognition to see if it still is the same user? All these things should be taken into consideration when you do a benchmark. Everything must stay verifiable. You must have an audit trail to prove that you've done it correctly. So that, in a sense, is what I think you should check. So I hope that answers also your question. I now want to give the last word to Richard Ney. He's the founder and CEO at Lerex Technology, an e-money and service provider. But he can tell you more about that. So, Richard, the floor is yours.
Thank you. So yes, thanks, Francois. So like Francois was saying, I'm the CEO for Lerex Technology. We are a banking as a service provider within the UK and the EA. Effectively, what we do for our customer is we fully manage program on their behalf. So we would have a customer coming to us wanting to deliver, let's say, a neobank. We work on the process with them. So all those challenges around KYC, entity verification, transaction monitoring, complaints, all of that, including the technology aspect, we take on behalf of our customer so that they can deliver their solution to their end users. So in that context, we see a lot of onboarding of various type of customer across various type of program, and some being consumers, some being businesses. And that's where we spend a lot of time thinking about how we can improve our IDV process, entity verification, and as well the ongoing piece. I think Laurent touched on that a little bit, but someone who is not a fraudster today might become a fraudster in 3 months down the line, right? So there is something as well to be done there. It's not because you're happy with an end user today that you're going to be happy in 6 months' time. So yeah, we always spend a lot of time thinking about how we can get that right so that our customers are happy, and to run points, working with your provider on those solutions is very important. I think it's also very important that your provider is going to take the time to explain their process to you. I think what we see on the kind of the EMI side of the fence, if you want, is that if a customer approaches us and say, I want to change your process, I want to be more open, more risk, taking or things like that, it's unlikely we'll say yes. But we will explain why. We will explain the risk we're taking, the reason why we think it's not okay. We'll explain the reason why we've decided to not onboard someone, for example, or to offboard someone. So I think having a discussion around that process to really understand the risk is quite important. So we've talked a lot about the importance of IDV. Obviously, the risks are very real. Laurence had some really good story around the risk of onboarding too many fraudsters. Obviously, it's financial liability. You could be liable for the frauds themselves. You could be fined. There is a reputational damage if you start onboarding too many fraudsters. It's not going to look very good for you, and ultimately you could lose customers. So that risk is very real. And going back into Laurent's point, absolutely every single new financial program is going to be attacked. But more than being attacked by fraudsters, I think I would qualify that more often than not, there are gangs, there are organized crimes that are going to attack you and are going to attack you in anger, are going to be able to put the work into trying to fault your system. So it's extremely important that you think about those challenges from day one and you try to get it as right as possible from day one to kind of avoid those risks. The challenges in doing that is I think we are, as with any security type work, I think there is a bit of a cat and mouse game. When I say getting them as right from day one, is also recognizing that you won't get everything right from day one, and that maybe what worked 6 months ago is not going to work anymore today. So as much as spending a lot of time being prepared for what you want to do, you also need to monitor what's happening and be extremely reactive. And having a system that allows you to put new rules in place extremely quickly becomes very, very important. So going back into kind of what you want from a provider is also being able to adapt those systems extremely quickly. The organized fraudster, I mean, let's face it, they're well informed, right? One point I'm going to make sure the presentation is different roles and different organizations working in silo. But in reality, we are all applying more or less the same process, more or less the same rule. So as a fraudster, it's fairly easy for me to know what people are checking, what they want to check, and to start trying to bypass those. And technology is also going to help them, right? You have great tool. We've had tools like Photoshop for a long time that allows you to forge documents. Obviously, the chip on the passport is really useful, but you might be working in an unbanked population. Your population might not have access to passport, for example. That does happen, that you want to kind of work around financial inclusion. Or you want to verify a proof of address, and it's becoming much more difficult to verify the authenticity of other documents which are not passport documents. So if you want to verify an address of a customer, very often it's a picture that you match against a database. And again, with the fraudster knowing what you're trying to do, it's become easier for them to kind of bypass your process. And to Fran's point, as good as an AI is going to be, it's never going to be 100% correct, right? It's always going to be things passing through. And the point I kind of want to make is, in that context of increasingly evolving technology, and with technology like deepfake arriving, how is that going to impact, for example, proof of liveness, right? And comparing the liveness against a passport picture, how is deepfake going to kind of affect that? So I think the reason why I'm talking about that, I think, is the fraudsters are going to have more and more tools available, and as an industry, we're going to have to adapt to that. And one thing which I find very surprising when I first joined the industry is that we all have the same challenges. I mean, the challenges Laurent described, Frans knows about it and he's faced it. We know about it, we face them. But we all work in silo, right? We all tend to try to resolve the same challenges on our own. And I don't think there is a massive amount of collaboration around what we should be doing, what are the rules. And we talked a little bit about transaction monitoring, and rightly so, Laurent said, I don't really want to tell you what I monitor for because he's giving more information to fraudster. So there's a number of reasons why we don't really collaborate that much. But I think it's important to recognize that we're all trying to do our things, in silo, and that maybe we should consider a bit more collaboration. And there are challenges around that, but maybe it's important to kind of talk through it. So that's what I'm talking about in that. So at the moment, we have all those kind of financial firms that mostly work on that, have their own rules, have their own process, keeping in mind that IDV is the start of a fraud process. You're going to do IDV, but then you're going to monitor the transactions. So again, you're going to have a set of rules on what transaction might be a fraud pattern or what transaction might not be. And I think a model where we collaborate a lot more, where we have a lot more shared information, shared database around what we are saying, would allow us to be a lot more prepared and a lot more reactive. To give you an example, about 18 months ago, we onboarded, well, we did not onboard in that case, but we saw a customer coming as part of our onboarding process, which we blocked. And I think purely by coincidence, that was flagged to a partner. And we also had to realize that actually that person had probably onboarded with 7 or 8 other programs from different peers using the exact same documents. And we happened to be catching it, but there was 7 or 8 other institutions that did not catch it. So again, if we had some ways of collaborating, I think we'd be a lot stronger. As well, keeping in mind that because we are siloed, we might not see the full pattern of the transaction, where again, if we had a bit more information on what's happening in other places of the network, we might be able to manage pattern a little bit more effectively. So there are clearly some challenges in what I'm describing. So I'm describing a situation where potentially we're going to start sharing rules, sharing processes. There are things we can share, there are things we can't share. I mean, we all know GDPR, and that's going to allow us to do something, not some others. There might be ways to share anonymized data to just kind of provide some kind of sanity check or something like that. Going back to the question around benchmark, I think again, sharing benchmark could be an interesting things to do. So it's, even if it's just statistics, could be interesting to understand statistics across the ecosystem. And I think as a whole would get us one step closer to a proper reactive, IDV and fraud monitoring system. But there are clearly challenges. So I mentioned GDPR, so regulation will not always allow you to share the data, although given the right term and condition, there's probably a decent amount you can do. Obviously, sharing and kind of the concept of potentially a central authority to manage that data and manage the rule is flawed as well. We all know the challenges of central authority models, so that's to be discussed. It's also going to kind of provide some concern around fraudster having even a greater ability to understand what everyone is using. So that sharing model has a number of challenges. It's difficult to get right, and it would require a fairly high level of collaboration within all the participants of the ecosystem. So I'm not saying that's the perfect world and that's necessarily the perfect solution. But the point I'm trying to make here is that challenge that we're talking about is going to become increasingly difficult in the coming years. There's no question about that. It's going to become more and more and more difficult to catch those people. And it feels like all trying to do it in silo is counterproductive. So I don't have a clear answer of what that could work and how that collaboration could work, but I think it's something which is absolutely worth talking about and is absolutely worth exploring whether it makes sense in some scenario to be more collaborative. Obviously, linking back to Lerex, that's what we do on behalf of our customers. So if you don't really want to worry about those problems too much, you can engage a banking service provider like Lerex. And that's it for my sales pitch. Thank you. I'll take some questions.
Are there any questions?
So there is one, please tell us how regulation impacts your KYC process.
Yeah.
So, I mean, quite heavily, I think, yeah, the regulation dictates a lot about what you can do and cannot do within the KYC process. And that also depends on your population, the type of program you're going to run. So depending on the usage of the product, the limit, the population, all of that is going to impact your KYC and KYB process. And the regulation dictates a lot of it. So yes, there's a massive impact on regulation. And then there is pieces that you might want to take differently. But absolutely, regulation has a very large impact. And it's country-based as well. Different countries might want to see different things, or might be more lenient than other countries. So yes, there's a very large impact of regulation.
Any other questions?
Well, I have a question for you, Richard.
Right.
Do you allow? Are you flexible on the on KYC technology partner and solution that you use or allow your customers to use? Or do you impose the ones that you've selected or the one that you selected with little flexibility as to a change there?
I would say more the later. So we have little flexibility with some exceptions. So from the Lerex position from the start, we select all our providers to provide the best possible quality. So we are not about the best price, we're about the best service. So the partner we select, and the partner we've selected is because we think they are the best on the market. Obviously, we don't know all providers, so we would review that regularly. And if a provider clearly was better, we would absolutely consider it, whether as a replacement alongside that, but then as part of our product. So we probably deliver that for our whole customer base. Then there are other situations where our customer use us for simplicity and time to market, but with an ambition to do that themselves. So it's quite common that we run two processes. Our customer runs their process, we run ours, and then we compare. And in situation where after a period of time, we are confident that it's working okay and provided the right regulatory approval underneath, actually there is one of our customers that runs their own KYC process because they have the right regulatory framework. So to answer your question, there is little flexibility, but if it was for the right reason, we'd absolutely be open to discussion and consider the right approach.
Yeah. Okay, I think I see no other questions.
Thank you.
So I thank all for being here. And again, sorry that for all the technology going wrong. So we started a bit late because of that. But especially, of course, thank Laurent and Richard for sharing their experiences and their lessons learned and making their time available. So take advantage of these lessons learned, and you can find more information on the respective websites. And as I said, the webinar is recorded and the link will be provided, including this presentation and all the addresses, so you can contact everybody. The speakers then, of course. So thank you very much. And as I said earlier, be smart, stay secure. See you next time. So
Thanks very much, everyone. Thank you, Frans. Thank you, Richard.